Well, hello, good day to each and every one of you, and welcome no matter where you are in the world. I hope you are happy, I hope you are thriving, not just surviving, and I hope you're doing well in these financial markets. So I'm Mark, also known as Hybrid Spartan Sniper, and I work for Hybrid Wales. So I run a group within Hybrid Wales called Hybrid Wales Sniper Squad. I'll tell you a lot more about that later on in the video, but in short, I got in Bitcoin in 2013, and I've been on a long, illustrious journey towards becoming successful when it comes to trading. I started day trading in 2018. I got battered, I got scammed, I got hacked, I got liquidated, and I realized this wasn't what I thought it was going to be. I thought trading would be learning a few trend lines, learning where to buy and sell, and I went into signal groups, and I thought I was going to be a millionaire, and I found out it was a lot more difficult and needed a lot more of my time, attention, and respect than I anticipated. So I ended up going on a journey. I've been done tens of thousands of hours of trading. I've done thousands of hours of courses. I've had loads of mentors, and there's 5 different stages to being a trader, and every single successful trader goes through them. The first stage is losing a lot. The second stage is losing a little. The third stage is breaking even. Then we improve more, and we start making a little, and then we improve more and more, and then we start making a lot. So trading can absolutely revolutionize your life. It can transform your financial, your financial status, and it can create true financial freedom. But the most valuable asset any of us have got is time. You can't trade time, you can't buy it back. Once it's gone, it's gone. And that is what trading does. It gives us time. So we have the freedom to make money when we want. But the problem is we need to understand all of the individual aspects and components of technical analysis of the markets, of trading, before we can find the simplicity within all that, the order within the chaos, the predictability within the unpredictability. So what I'm going to be doing today and moving forward, I'm going to bring lots of educational content videos on those individual aspects and components of trading, in the hope that you get something from it, that you can incorporate these things into your daily trading, and you can create successful strategies yourself. However, like I said before, I run Sniper Squad, which is free to join. It's a Telegram group. Come and jump on board. It's free for everyone. I'll tell you more about it at the end of this video, but it's free for a limited time only. So the time is now. If you want to join, come and join the family. We've got a community of people. We give market updates, trade ideas, and we handhold people towards financial freedom and success. That's the goal. And we do live Zoom sessions and all sorts of stuff I'll tell you more about at the end of this video. But this video is going to be an educational video. I hope you get a lot from it. If you haven't already, subscribe, like, give us a thumbs up, and leave a comment under the video just to say what you got from the video, whether or not you enjoyed it, and what other content you would like to see. So I do hope to see you all in Sniper Squad very soon, but until then, enjoy the video. So this specific video today is going to be on a powerful indicator called Key Levels Spaceman BTC. I'm going to show you how to find it, I'm going to show you how to adjust the settings, and I'm going to show you how to add it to your chart, and more importantly, how to trade it and incorporate it into a successful trading system. So what I would like to say is there is no one standalone indicator which tells us when to buy and when to sell. What we need to do is to build a successful trade strategy, a trading strategy, trading plan. We need to find high levels of confluence trade ideas. So confluence, what is confluence? Confluence is finding many different reasons to enter a trade. So it might be that the price action has come onto support, and that's one reason we might want to start thinking about entering along, but that's only one reason. But if it comes onto support, which is also a rising trend line, now that's 2 reasons, and we're starting to build confluence, meaning a multitude of reasons as to why to enter the trade. If it's on support and it's on a rising trend line, and it just so happens that the stochastic RSI is at the bottom turning up, then that's a 3rd reason for why we might want to start thinking about entering along. If it's on support, it's on a rising trend line, the stochastic RSI is at the bottom, and it's also just clinging to the 21 exponential moving average, that's another reason. And the indicator I'm introducing you to today shows us many key levels, and all of these can be traded on, but they have to form a bigger level of confluence. So I would never use one solitary indicator as a standalone reason as to why to enter a trade. They're all very useful, and the more reasons we have to enter a trade, the more reasons that there are for everybody else to be doing the same thing, the more chance that we're going to be jumping into a trade at the point where there's going to be a significant reaction, such as a pump or a dump. We want to be the right side of the market, and there might be millions of people trading on support, buying along because it's on support. There might be millions of people buying because it's hovering just above the 21 EMA. There might be millions of people buying because the stochastic RSI is at the bottom. The point is, the more levels of confluence that we have, the more those millions and millions and millions of people are all added together and create a significant probability that price is going to pump from the point that we're entering along. So with that, I'll jump into Spaceman BTC. I hope you enjoy this video and get something from it and can incorporate it into your trading system to become even more profitable or start becoming profitable. So enjoy. So here you can see I am showing you the chart of the wonderful fart coin, which has in actual fact been showing exceptional relative strength in relation to the rest of the crypto market of late. And for all of you TA enthusiasts out there, what you might be able to identify is there's been a perfect cup and handle formation, which is then exploded to the upside. And for those that don't know, these are measured moves. So usually you would take the depth of the cup, and so there's the cup, there's the handle. And when it breaks out of there, usually that can be a measured move from the cup to the top of the handle. And you can see that's played out absolutely perfectly. However, we are not here to talk about cup and handle formations and measured moves. We're here to learn how to implement the Spaceman BTC indicator, how to find it and how to trade it. So to find the Spaceman BTC indicator, you want to come up here on Tradingview and you want to click on indicators, and then you want to type in key levels, there we are, key space levels Spaceman BTC. So you want to click on that. It's got 8,300 followers so far. We want to click on that and we'll become another one of those. And here we are. So what happens is you've got a lot of different lines that come onto the chart now, and all of these are, as the name of the indicator suggests, these are all key levels, and each one of these represents a different price open or a price close of times gone by, but they are key levels. So you can see we've got the monthly open, the previous monthly mid, previous weekly low, the previous monthly low, the Monday high, the Monday mid, the daily open, and we've got a variety of others, including the yearly open, yearly mid, yearly close, quarterly mid, and so on and so forth. Now, what we want to do to change these settings, we want to come to the top left of our screen here, and we want to click on this little cog. When we click on that little cog, that opens up the settings panel, and then you can remove or keep as many of these on as you like. So I like to keep the Monday range on there, the Monday high and the Monday low, particularly on a Tuesday, Wednesday, Thursday, or until the Monday high or low has been invalidated, it's been swept, meaning price has deviated above and back below or reclaimed the Monday high. With the Monday high and the Monday low, you get a very good range to play within Tuesday, Wednesday, Thursday, or until they both get invalidated. We've got the Monday range, we've got the weekly open, weekly high, weekly low, the previous weekly mid, monthly open, monthly high, monthly low, previous monthly mid, and so on and so forth, quarterly, yearly, and then we've also got sessions. I will do a different video on trading the sessions because you can trade Asia into London and London into New York, and you can trade those ranges, but that's beyond the scope of this video, and for now we won't be adding those to the chart. So these are all key levels, and what we can do is remove some of them, add some of them. It is very much dependent on your time frame that you're trading, whether you're trading scalp trades on the 5 minute, 10 minute, 15 minute. In that case, you want to be looking at the hourly and the 4 hourly time frame to start building a bit of a strategy and get your trade ideas. If you're trading slightly longer positions, sort of swing, then you want to be looking at weeklies, you want to be looking at daily time frames. So we'll dig into all that in another video, but this is Spaceman BTC. So you can deselect any of these that you want. I'm going to deselect the weekly, I'm going to deselect the monthlies, and I'm going to deselect the quarterlies, just to clean up the chart so we can get a bit of a clearer look on how it looks. So what we've got here is, you can see price has actually taken the Monday low. So this is quite good, because for demonstration purposes, generally, if price has taken the Monday low, we can expect usually a bit of a retest. If it struggles to get above, then we'd be playing it down to this level, which would then be a retest of this whole cup and handle formation. So we're not going to be doing that today, but it does help you understand, that if usually we get a retest, and if it doesn't get above, then it'd be going down. However, if it does reclaim it and shows acceptance, price gets acceptance above there, you could usually play along to the next resistance level, or in this case, the Monday low. If it reclaims the Monday low, usually at some point in the coming days, it will go on to take out the Monday high as well. So you can usually play these from the extremities of that range. So it might be the daily open, you could play it to the previous daily close, or vice versa. And yes, so what I'm going to show you is how to actually trade this. And there's going to be some powerful alpha within this, which you can use, whether it be Fibonacci levels, whether it be an exponential moving average, whether it be a moving average, whether it be support, resistance, and other key levels. What I'm going to do is I am going to move that down here, and we will simulate a daily open. So that there is the daily open. So I'm going to put D. So what we might expect to see, in actual fact, what we might expect to see is price making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and it's looking really, really good. However, what might happen is price might start stalling at the daily open. And as it does this, what we could expect to see, we want to see some sort of reaction at this daily open. So what you might expect to see is a bullish engulfing, or some pump above the daily open, because what happens is, we are classed as retail traders. Market makers don't always move the market, but they do certainly move the market at key levels, because they want to trap us into taking trades. So what happens is, there's all these courses out there teaching us how to trade breakouts, and if it breaks out of the daily open, then you want to enter a long. If it breaks above the daily high, you want to enter a long. If it breaks above the Monday high, if it loses the Monday low, then you want to be taking a short. If it breaks out of this bull pennant, then you want to be taking a long. And what you will find 7 times out of 10, 8 times out of 10, is it's not a breakout, you'll get a fake out. So what that looks like is, let me just get rid of this. So what that might look like might be like this. I'm going to have a green bullish candle, another green bullish candle, another green bullish candle, and then price might start stalling. So you can see it just starting to slow down a little bit. And then the next candle, it might be something like this. The next candle, you might be waiting thinking, oof, all my courses have told me to trade this breakout. However, the candle might go like this. You might enter the trade, retail will jump in, get super bullish, because now it's breaking the previous daily open, or whatever key level it is, and it breaks out, and you think you're in a successful long, and price will come all the way up to here only, and I'm sure many of you have experienced this, price will come down like this, it will leave a huge wick like this, and that would be a shooting star. Now that candlestick, when at the top of an uptrend, is a bearish candlestick. Now, everybody that got super bullish during this are now trapped. Everyone who entered along here, entered along here, entered along here, are now trapped. Price has deviated back under the daily open, and we want to be hitting the sell button. Yes, we want to be hitting the sell button, because if it does that and it breaks to the upside, and that's a fake out, and it deviates above and then comes back below, 9 times out of 10 following price action is going to look something like this, and we will play it down to lower levels. So what we want to be doing is, we may be retail traders, but we don't want to be trading like retail traders. So what we want to be doing is, we want to be waiting for candle closes for confirmation. So we know that, and the hourly time frame is probably the best, depending on your trading system, but the hourly time frame, because a lot happens in the hour. Price can pump up there with a 15-minute candle, and then the next 15-minute candle can open, and that could come down again, and the 1 hourly candle may look like that. That is a bearish candle, and alternatively, if you flip it, if they were all red candles, and that was the price had retraced to the daily open, and it came down and then pushed back up, all the people that shorted here would be trapped, And if it's closed above the daily open, that would be bullish. And again, then you could expect price to rally its way back up. So it's important to understand these deviations because these work on EMAs, moving averages, support, resistance, order blocks, whether it be a fib level, these deviations happen all the time. The market maker is there to trick us and induce emotions within us that forces us to take a trade. We do not want to be retail traders. We are retail. We don't want to trade like retail traders. We will not be getting trapped. In Sniper Squad, we will not be getting trapped because we will be waiting for confirmation. So we want to be waiting for a confirmation of an hourly candle close. So I'll show you typical what happens with the daily open. So you might see something like this. You might see Asia price action starting here, and then that might be the opening candle, in which case this would be the daily open. So I'm just going to write DO here, and then Asia might push price to the upside in a nice uptrend before London opens here. Then it might get a bit bearish, you might get a bearish engulfing candle, and it might start a little downtrend. And it's coming to our daily open. Quite often it will retest this, sometimes deviate under, reclaim it. That would be our cue to go long. Once it's reclaimed it and showing acceptance above it, what we would want to be doing is taking the long tool, risk to reward, put that in here, we'll put our stop loss under the last low, and we'll put our TP playing it to the last high. And I typically put in TP levels, and a TP level would be, I look to the left of the chart. Where is it rejected from? In the past, you can see it's rejected from there, you can see it's rejected from there, you can see it's rejected from there. So they would be my 3 TPs. 1, 2, 3, and a final TP would be there at the top. You can also leave a small percentage of your trade to run in case it continues to pump. Also, what I tend to do, as soon as my first TP has been taken, so price, as soon as price comes up here like this, hits my first TP, I will then move my stop loss to break even. So it's risk free and we're good to go. So that strategy works with all of the key levels. You could have the Monday high and you could have the Monday low, and this is relevant now because I don't think the Monday high or the Monday low has been taken currently. And you might have price just moving around like this, and you might see price coming down to the Monday low, comes under here. Everyone gets bearish because now in their mind it has lost the Monday low, but we want to be waiting for a 1 hour confirmation candle, and even if it closes underneath on a 1 hour time frame, we could enter a small position, but we have to be mindful that price could come back up and reclaim this. And if that happens, we want to be cutting it at a small loss, because we do not want, if it continues up, we do not want to be in a short position and getting our account absolutely rinsed. So what I would do in that situation is I would cut it. If it closes on a 1 hour candle, I would enter a short. But if it reclaimed it, and I have to anticipate that it may reclaim it, I would cut my short position. If price gets acceptance here, then I would enter a long, as I've already shown. I'll put that in there, and I would move my TP up to the range high. By the way, usually if it's the Monday low and it reclaims it, more often than not, you can play it to the Monday high. So I'd put my stop loss under the last low, and and I'd be playing it to the Monday high. Because if it's taken the Monday low and deviated and then come back, this has induced a lot of people to enter trades on the wrong side of the market. So they'll all get liquidated. You can play it to the range high, same rules apply, TP1, TP2, and then leave a bit in. Stop loss to entry after your first TP. But this works with whether it's the previous weekly high, whether it's the previous weekly low. You just need to watch price action and watch for those deviations. So we're watching, we're seeing price get exhausted, we're seeing that, maybe a deviation, come back under, struggle to get back over, and we're playing a short position to lower levels. Alternatively, we might see price action coming down, deviate, reclaim. That would be our trigger there to go long. So regardless of what the key level is, that's for you to determine, to build your system and your strategy. But those deviations, we want to be watching out for them, because the key levels are where market makers really try to trick us into taking positions on the wrong side of the market. How many times have you you've seen price ranging within a bull flag, you see price ranging, breaks out, everyone goes long, price breaks back down here, and before you know it, you're on the wrong side of a trade, and then it's created what's known as a Bart Simpson pattern. And yes, we do not want to be on the wrong side of the market. So we want to be waiting for those deviations. Also worth mentioning that this works with moving averages. So you might have the 200 period moving average here, and you might have price action, dumping, deviate underneath it. Everyone thinks, oh no, it's lost the 200 period moving average. I'm going to enter a short position. Before you know it, it's reclaimed it. It starts holding it, changing market, changing character, break of market structure, and it starts an uptrend. So we want to be watching out. These deviations are extremely powerful. There's a book, I can't think it was called Trading in the Shadows of the Wealthy. We want to be trading in the shadows of the market maker. So we need to be mindful of the market makers' little tricks, little ploys, and the things that they do to try and induce us into the wrong positions. We don't want to be in the wrong positions. So I hope that's been clear enough for everybody. This Spaceman BTC key levels is an exceptional indicator to be able to identify key levels, and we can see here, Fartcoin's currently lost the Monday low, more than likely going to come down to retest the top of this cup and handle. However, what I will also show you is you can go and backtest this yourself. You can put on any key level you want. Let me just go back to settings. I'll put the daily open. I'll get rid of the Monday range, and you can just go and test this yourself. You can put it on any time frame. Go and put it on the 10-minute time frame and see how it interacts with the daily open. So to do this, you would come to the top of the screen here. You've got replay, and you can go and pick any point in time, and then you can go press play. Here you can choose your bar speed. You can press play on it any point in time. We'll go here, got it on a 10-minute time frame, and then you can watch how it interacts with the daily open just by, you can choose the speed you want the replay to go. So if you want it to go 3x, you can press 3x, then press play, and then you can adjust the screen to suit yourself, and then you can just press play, and you can just watch it play out. And you can see here the daily open was here. Classic example, look at this. Let me just rewind that again, just to show you. So you can see here, there was the daily open, that candle. Look what happened. Price came back up, just deviated just above it. I'm going to stretch that out so you can see. Deviated just above it, above the daily open, came back underneath. Bearish engulfing candle, meaning a bearish red candle, which engulfed the last 1, 2, 3, 4, 5, 6 candles. That's a bearish candle at the top of this little uptrend after it deviated the daily open, and then that would have been a good opportunity to take a short. And if I was going to take a short on that, I would have got my risk to reward tool. I would have entered probably around here, stop loss above the last high, and then I possibly might have played it to the top of that cup and handle formation that we were talking about before. My TP levels would have been potentially here. I'll just pop them in so you can see. This level here, there would have been a TP there. I would have had a TP in here, where you can see it's bounced from in the past, and then you can just allow it to play out. So you can go back and back test this for yourselves, and you can see, so it's found support, but my stop loss would have been back at break even here after I've taken 2 lots of profits, and it's just teetering around, and before you know it, it'll be the Asia session again, there'll be a new daily open, and sometimes when it gets to there, rather than try and wait for the last 2 or 3%, I'll just take full profits. So here what you can see for demonstration purposes, we've got the weekly high and the weekly low. So we'll be watching for deviations. It's currently underneath. You can see we've already had 1 deviation, then it had a pump. It come back down, deviated again. We've had a little pump. So you can get scalp plays on this too, but when it's the weekly low and the weekly high, you really want to be playing this on a bigger time frame. But we'll watch it, see what happens. We've got the weekly low here, so we'll see how it interacts with that. If it comes up, retest, struggles, and looks like it's turning over, we would take a short. If it breaks above it and closes 1 hour candle above it, then we might look at taking a long. So we'll press play and see what happens. So we can see we would have entered here on this bullish engulfing candle, and we would have probably have taken a long around this region because it's just closed just above it, and on a smaller time frame that would have been a retest. We would have managed our risk, would have played it to the next level high. However, we would have been entering here. Our first TP would have been here, so we would have already taken a TP. It just played faster than I could have stopped it. And then a second TP would be around this level here, and that would be the top of the range. So we can see that it's already hit the first TP1, so our stop loss would be at break even. We can press play, knowing this is risk free now, and we can wait for another trade opportunity. So let's have a look and see what happens. So there you go. It's just hit. And not only is it just hit our final TP, our second TP, you can see what's happened here. There was another trade opportunity there, because what we've got there is it's taken the weekly high. So this line here is the weekly high. Let me just get rid of all my drawings. Look, it's created a weekly high. It's pumped above it, deviated back underneath. That would have been a short position. We'd have been playing the short to the bottom of the range, and stop loss somewhere around here. And we would be seeing what happened from this point. As soon as we hit a TP1, we'd be stop loss to break even. So we'd have been break even well before that point, and that would have been a successful trade. Now it's coming down to the range low of the weekly high, of the weekly low. And we'll see what happens here. So deviated underneath, pumped back up. However, it hasn't closed above it, look. So this might now potentially be a short position. Now it's come back above it. It's teetering around. So this here would have been a long trigger for me, because it's reclaimed above it and then it's broke this high here, and I would have put my stop loss just under the last low, TP at the top of the range. Press play, see what happens. So we'd have taken a TP there, TP2, and there's the full TP. So you can see how this can be used, but particularly you're looking for deviations. You can see how this can be used at any levels, whether it's the monthly open, the monthly close, the monthly low, the weekly high, the weekly low, the quarterly high, the quarterly low, the yearly open, the yearly close. You can use this indicator for any level, but you're looking for those deviations. So I hope you understand how to use this now. You understand how to put it on your chart. You understand how to take trade opportunities, how to wait for deviations. And if you've got any comments, leave it underneath this video and let me know what other content you would like. I think that the key take-home point is that we do not want to be getting trapped by retail by the market makers. We want to be waiting for those deviations. We want to be waiting for confirmation. You're always going to lose some trades. However, we want to have an edge where we win more than we lose. Sometimes, particularly with the weekly open, as you've just seen, the weekly low, the weekly high, you can get really significant risk to reward trades. And if you get a few there which are like 4R, it basically means you're winning 4 parts as opposed to the 1 part that you're risking. So if you're risking $10 but you're making $40, you only need a few of those trades out of 10 to win, and you can afford to lose 7 trades and you will be very profitable. So it's important to understand there is no foolproof 100% successful entry system where you're guaranteed to win every trade. Losing is like a restaurant will have its overheads to pay. They'll have to buy the stock, they'll have to pay the staff, they'll have to pay for electricity, they'll have to pay for gas, and they have the overheads. Any business has an overhead. Trading, we have our overheads, and they're called losses. We can't help but lose some trades because the market is unpredictable, it's volatile, anything can happen. Trump could tweet something, it can dump the market, pump the market. Our TA can't account for external factors that can influence the market. But what we can do is manage our risk. We can set the parameters under which we enter a trade, and we can make sure that we have control of our portfolio, managing our risk with a very good edge, taking high probability, high confluence trades, which will play out more often than not over a big enough sample size. So if we take 30 trades, we might win 15 to 20 of them. If we take 100 trades, we might win 30 to 40 of them. If we take 1,000 trades, we might win 400 to 500. But if we're taking trades that are more often than not making between 3 to 5R, meaning we're making $30 every time we risk 10 or $50 every time we risk 10, we're going to be extremely successful and extremely profitable. So I'm going to tell you a little bit about Sniper Squad now. So as I said before, I'm Hybrid Spartan Sniper. I work at Hybrid Wales. Hybrid Wales has many different services, many different aspects. All of them provide incredible value if you're interested in trading the crypto markets, meme coins, airdrops, all of that sort of stuff. And right here at the bottom is the part that I run, the Sniper Squad. So in Sniper Squad, you can find all sorts of educational content similar to what you've just seen. You can find live sessions, live chart updates, live market updates, macro overviews, trade ideas, educational content, posts on mindset and all this sort of stuff. But I'm very excited to be able to also say that we've got live Zoom sessions, live one-to-one mentorship, and a beginner to pro 1-week handheld challenge where you can actually get my support and guidance, and on a one-to-one or in a group setting, and I will tell you more about that. But Sniper Squad is free to join for a limited time only, so just click on Sniper Squad bot underneath this video and follow the steps. You can join for free. You just need to sign up to Blowfin, or there's a few other ways you can do it. So make sure you jump on board. We've got a community which is rapidly growing, a family of budding traders and veteran traders all helping and supporting each other to navigate these markets. Whether there's a bull market or a bear market, we want to be making money. So come and jump in Sniper Squad for free. You've got nothing to lose and everything to potentially gain. And for my exclusive services, if you come to hybridwhales.com/winwithmark, it'll bring you to this page, which tells you a little bit about me. It tells you more about what you can expect in Sniper Squad, but more importantly, as I've just said, we've got a full refund guarantee where you can join, and if you're not satisfied with the service that you receive, then you get a full refund. Now, for a limited time only, these are discounted prices. We've got monthly. For $39 a month, you can come and join our regular Zoom sessions where we'll be live trading, we'll be doing live charting, you can do token requests, and there's all sorts of other things that'll be going on in the live Zoom sessions. You can ask specific questions about technical analysis and help and support each other as part of a group. There'll be 2-3 of them every week, and also spontaneous ones. If the market dumps, I might jump online and say, listen guys, the market's dumped, but this is what I'm expecting. We'll find some opportunity within this dump, and we can do this all together. So that's only $39 for a limited time only. That's for the full month. You can join all of the Zoom sessions and you'll have access to the recordings. There'll be TA strategies, systems, scalping strategies, swing compounding systems, and there's all sorts of stuff that's going to be going on in there. Then we've got the one-to-one mentorship. So for one full session, it's $149 for a limited time only. But if you bought 3 sessions, you get one for free, and that's $499. That would be for me to take you wherever you are at right now to really propel you to the next level. Let's identify what we can do to improve you as an individual for your trading journey and your development. So that would be very much personalized to you. Your starting point is your starting point. You need your room for improvement is your room for improvement. I would work with you to make sure that we take you to not just the next level, but many levels above. And then we've got the 7-day handheld beginner to pro 1 week challenge. So that would be, if you don't really know much about the markets, you don't really know much about it, you haven't got a system, you haven't got a strategy, I can help educate you and give you a bit of a blueprint, a bit of a strategy, so you can be helped to follow that over a course of a week. So by the end of the week, you'll know how to open the charts, you know how to look for trades, you'll know how to take trades, and you'll know kind of what to look for. So that's much more like a little crash course, but not as extensive as the one-to-one support which you would get in the one-to-one mentorship. However, that's much more for novices and people who really haven't really done that much with regards to trading. So they're the 3 services that I personally offer. Like I said before, in the Hybrid Whales page that I gave you a link to before, hybridwhales.com join, you've got all the other Hybrid Whale services. So come and jump on board, join the family at Sniper Squad. It'd be great to see you in there. There's alpha posted in there all the time, trade ideas, market overviews, like I said before, and it'd be really good to see more people and to be able to help more people navigate these markets. In a world full of misinformation, in a world full of scammers and hackers, you know, us at Hybrid Whales and Sniper Squad, you know, we don't want people to be losing money. We don't want people to squander thousands and thousands of dollars on retail courses, because they are retail courses. I've just shown you in this video that retail are tricked into taking positions. We're taught to trade certain chart patterns. We're taught to trade in certain ways. But the market makers know all this. We need to be ahead of the game. We need to be 3 steps ahead, 5 steps ahead. And we need to know what they're doing at certain levels. So us at Hybrid Whales, we don't want anybody to lose money. We want every single person to succeed and come win with us. You know, experience some losses with us, but most importantly, come and be together with us on this journey, you know, where the destination is financial freedom, success, no matter what the market does. We want to be prepared. We want to be planning our trades, we want to be trading our plans, and we want to be making sure that we execute things with military precision like proper snipers. And it'd be really good for you to come and jump on board and for you to join the family and for you to learn and start to develop and build your own trading style, build your own process. We don't focus on making money. We focus on the process. If we focus on the process and we master the process, the money just comes to us. That's the beauty of trading and focusing on the process. So I hope you've enjoyed the video. Click on Sniper Squad bot, join up to Sniper Squad, click on hybridwhales.com, join up to Hybrid Whales. Come and join us at hybridwhales.com/winwithmark and get involved and get some personalized support and guidance, or jump on our Zoom sessions. I really hope you've enjoyed the video, and I hope to see all of you very soon in Sniper Squad, and I'll look forward to our family continuing to grow and succeed, more importantly. So you'll see me again very soon. Thanks for watching. Don't forget to subscribe, like the video, leave a comment, and I'll keep you updated with much more education, content, and anything else that you want to see. Thank you.